Welcome back to Accounting 101 for Online Entrepreneurs. Today we're talking about VAT, or value-added tax. It's a tax that gets applied to the price of goods or services sold to European customers. Your company collects this tax from its customers and then pays it to the government, or more specifically to the tax office. So effectively, your company is acting as a taxman for the government. You can't keep that VAT that your company collects from its customers. You'll pay it to the government. Conversely, your company may be charged VAT from other companies when acquiring goods or services. At the end of the year, if you've paid more VAT than you collected during that year, you can ask the tax office to pay you back that money. Other countries outside of Europe have a tax that's similar to VAT, but as an Estonian company, your business will abide by the rules of European VAT. The VAT is applied to goods and services as a percentage of the sale. This percentage varies from country to country. VAT, for instance, is 20% in Estonia, 25% in Croatia, and 16% in Germany. Thus, a service whose base price is €100 will be €120 with Estonian VAT, €125 with Croatian VAT, or €116 if it includes German VAT. The golden rule is this: VAT is never earned or lost. Your company must pay all VAT it collects, and all VAT paid by the company will be refunded to it. Not all companies are VAT liable, meaning that your company may not be required to collect VAT from the customers. In the next video, we'll explain which VAT you need to apply and when you need to do it. Welcome back to Accounting 101 for Online Entrepreneurs. Today we'll be talking about VAT again. So we already know what value-added tax is, but when and how should you apply it? First, you only need to apply VAT to your invoices if you're VAT liable. You're required to become VAT liable and get a VAT number if the sales of your company exceed €40,000 per year. When you become VAT liable, a unique VAT number is assigned to your company, which is valid in all the European Union. If you're not VAT liable, which means that you don't have a VAT number, you'll never add VAT to your invoices. You don't collect VAT from your customer, and you don't have to pay it back to the tax office. However, if a VAT liable European company adds VAT to an invoice issued to your company, you'll pay it and you won't be able to recover that VAT later. If you're VAT liable, you may need to add VAT to the invoice depending on your customer and the activity. If your customers are outside of the European Union, you never need to add VAT to your invoice. The VAT only makes sense in the European Union, so you cannot charge it to a client outside of it. For other Estonian companies, you will always charge Estonian VAT, which is 20%. If your customers are other European but non-Estonian companies with valid VAT numbers, you'll add 0% VAT to your invoice. For example, an invoice to or from a German company with a valid VAT number must indicate VAT 0%. In any other case, if you are issuing an invoice to an individual or a company without a VAT, then, for services that require your intervention, such as development, consultancy, design, what have you, you add Estonian VAT 20% to the invoice. For services that are automated and don't require your intervention, such as a SaaS platform, online courses, or ebooks, you'll add the VAT of the customer's country. So for a customer from Germany, you'll need to add 16% VAT. And for a customer from Croatia, you'll add 25% VAT. That's why you may want to become VAT liable before your sales reach €40,000 per year. If you have partners or providers in Europe, and both of you have VAT numbers, they'll add 0% VAT to the invoices they send you. Welcome back to Accounting 101 for Online Entrepreneurs. In this video, we're talking about how VAT works for dropshipping businesses. Dropshipping businesses are subject to a special VAT treatment. In a typical dropshipping scenario, say your company is in Estonia, but your provider is in China. Your customers are distributed all around the world. So your Estonian company can sell goods to German citizens that get delivered by the Chinese company directly to their door. As such, the sale isn't considered to happen in Estonia. That means that unless you have a warehouse in Estonia and distribute the goods from there, the Estonian tax office will not grant you a VAT number. You'll not be able to add VAT to your invoices, but you won't be able to deduct the VAT of purchase invoices from other European businesses either. This also has important implications to how your company deals with VAT. If the provider and the customer are in the European Union, then distance sales rules apply. This means that the sale takes place in the country of the customer, and you need to register for VAT liability and submit VAT reports if your sales in that country exceed a threshold. That varies from country to country. If the provider is not in Europe but the customer is, you may even be required to get a VAT number from the first sale and submit VAT reports in that country. We know that obtaining a VAT number and submitting VAT reports to different tax offices can mean a lot of paperwork and hassle for your company. Fortunately, there are companies that provide this service globally, and registering your company for VAT liability in the right tax office at the right time and then submitting the reports for you. We strongly recommend considering the services of one of such companies if you have a dropshipping business.